Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from Ingenia Communities Group to discuss its half-year results is Managing Director and CEO Simon Owen. Simon, welcome back.
It's great to be here, Carolyn.
Now, you've just released your first half results of 2017. What were the highlights?
I think the highlights was very strong growth in revenue and underlying earnings, so they're both up around 26%. Our statutory profit was down slightly, reflecting the loss on sale when we exited our deferred management fee business. In terms of home sales, we recorded record settlements for the half, and also we've got our margins have continued to expand, which is very positive. Our Garden Villages business, which is probably a bit of an unsung hero, has closed out the year at record occupancy of 90.4%. And within our relatively new tourism business, we were able to grow like-for-like site rents by around 6%. So overall, I think it was a very good result.
And what was the distribution for the half, and how does it compare to the same time last year?
Yeah, the distribution for the half is 5.1 cents per security, which is up a bit over 15% on the prior comparative period.
And Simon, now to your portfolio. How did each segment perform, starting with lifestyle parks?
Yeah, in our lifestyle parks, there's really two elements to that. One is the collection of rental income. We were able to grow that income very strongly over the half. I think that's a very strong result. And then in terms of the development, we had record settlements for the half of over 80 settlements, which is up over 60% on the prior period. And we've also been able to expand the margins to around $105,000 per new home sale. So I think overall a very good result from that segment.
And what about Ingenia Holidays?
Yeah, Ingenia Holidays, so we now are in a position, following the acquisition of the Cairns Coconut Holiday Resort, we now have over 750,000 room nights per annum. What we've seen in that business is like-for-like rent growth of around 4%. I think it's a strong position, and we're also seeing some very strong tailwinds in that business underpinned by a lower currency. So that business is performing very well, Carolyn.
And how are your Garden Villages going?
Yeah, Garden Villages, a bit of an unsung hero, but closed out the year at a record occupancy of 90.4%. During the half, we actually launched a new care initiative called Ingenia Care Plus. We're trialling that in 2 of our communities at the moment, and we see that that's a longer term way to extend the tenure of our residents and provide a higher level of care. So yeah, we're very excited with Garden Villages. It's a great business.
Very good. So can you tell us about your acquisitions and disposals for the half?
Yeah, over the half, in terms of disposals, we sold a 90% interest in 5 of our deferred management fee villages. That released a bit over $40 million, and following the announcement of the acquisition of Cairns Coconut Holiday Resort last week, that capital is going to be deployed into that acquisition. For the half, we actually either acquired or announced the acquisition of well over $100 million in new communities. The 2 largest there was we bought the largest caravan park in Western Sydney, called the Avina Van Resort, and we have a DA in for that project now to bring in around 246 new homes. And the other major acquisition we actually announced last week, and that's the acquisition of the single largest caravan park deal ever done in Australia, which is up in Cairns, and we take ownership of that park next month. We've got a team up there at the moment preparing for the integration.
And Simon, now to a more general question about interest rates. Yields have moved sharply higher since the election of Donald Trump as president. So what impact will this have on Ingenia?
Yeah, I think like a lot of executives, we're sort of very closely watching what's happening in the US and the impact on the global economy. I think in the US they're definitely on a tightening bias. I'd be surprised if we start to see interest rates in Australia go up in the short term, but things can change very quickly. I actually think the election of President Trump's probably very positive for our business in the short term, in that it's going to put pressure on the Australian dollar currency, which means that people are more likely to holiday at home rather than go overseas, which is positive for our holiday business. But underlying the development side, we're seeing very strong and continuing growth, and in a number of our communities, including our Southwest Rocks community on the New South Wales mid-north coast, we can't actually get the homes in quick enough to meet the demand. So I guess it's watch and see with Trump, but overall I think it's very positive for our business.
And finally, Simon, what's your focus for the next 6 months and your guidance for the remainder of FY17?
Yeah, I guess in terms of guidance, for the first time ever we've given EBIT guidance, earnings before interest and tax guidance of $30 million for the full year. That represents growth on last year's profit of over 20%, so I think that's a strong result. In terms of the key focus, there's probably three things. One is sweating our existing assets harder, so trying to maximise the returns from those assets. Secondly, it's divesting some remaining non-core assets to recycle that capital into further acquisitions and development. And then in terms of development, this year we've given guidance of 190 settlements for the year, which is strongly up on last year, and also targeting 260 settlements for next year. So there's lots to keep us busy.
Simon Owen, thanks for the update.
Thank you very much.